All right, what's going on, Tycoon? Super excited for today's video. I am going to teach you guys the fibs, and I am going to make it as simple as possible, okay? So what you do, all right, is you're going to put the bottom level at the bottom of your chart, okay, at your bottom. So this is our bottom right here. And then you're going to put it at the top, okay, of your chart as well. And that's going to be your top, all right? These are what people call the swing low and the swing high. Okay, so what you want to do is you want to chart your swing low, your swing high, and it is going to make all of these levels for you. Okay, you can color coordinate them in the settings. Okay, I'm using TradingView, which is a free platform. So I definitely recommend TradingView for anybody, beginning or looking to, learn how to chart. And maybe they just use Robinhood or some simple things. TradingView is a free platform that you guys can do this on as well. Okay. But yeah, you would basically just go to the settings and then you would click on these and you can change the colors. Okay. So that's how I did it. So what it's going to do is it's going to give you, using a mathematical equation, all right, key support and resistance levels. All right. That's what all of these levels are, these lines. All right. And the ones that you want to pay attention to, all right, is the 38.2% line. If you bounce off of that support level, then you have what is known as a strong trend. Okay, basically off of that dip. All right. Now, if you come back down to the 50% level and you bounce off of the 50% level like it's currently doing, you have what's known as a normal trend. Okay, so this is a normal, healthy pullback, right? This would be a strong pullback. If we pull back and only bounce here and then go, then hey, we're in a strong upward trend. All right. If we bounce here, it's a normal trend. The 0.618, the 61.8% is a weak trend. Okay. So basically, if you bounce off of there, then that's kind of a weak trend. So, this uptrend isn't too strong. It could die off soon. So you would want to be cautious of that. But it is also the bounce, level. So, the trend will most likely continue off of that. And then between 61.8% and 65% is what is known as the golden pocket. And that is what some people can, consider the golden pocket. All right. It basically where if you can get it in between this level, you have a really good long-term position hold, ability or like chance to get in, on a long-term position, right? And below there, essentially, it's a dud. Okay, so you could bounce off the 78.6% level, but I really wouldn't be in any bullish positions, at these levels down here. And then at the very bottom, the 100%, that is your reversal signal that, basically it is no longer going up, it's reversed, and we're making lower lows now instead of higher lows. All right. So that's literally it, guys. Okay, you can do this against across multiple time frames. All right. Currently, we're using the 1 hour chart, and I'll just delete this for you guys, and let's change it. Let's go to the like the daily chart or something, for instance. All right. So what you would do is you would come here, right, and you would go to your lows and then draw it up to your highs. Okay. And that's what it looks like on the daily chart. So if you notice, okay, what we did with the SPY, the S&P index, basically the overall market, gauge bounced here. Okay. So we had a massive run up. We had a very, very nice run up. Okay. And then we bounced here. So it looks like we're in a normal trend, and we're finding support at the 38.2% level. All right, which looks good. So what you would look for is for this to continue bullishness. Okay, and if we fall, and let's say we're having we're coming up and then we come back down. All right, as long as we bounce here or here, all right, we're still showing signs of a bullish trend. If we come back down and bounce around here, it would be a weak trend. It wouldn't be too strong necessarily. And then we have our golden pocket right between 61.8% and 65%. Okay. So I hope this video, helped you guys. I try to make it as simple as possible. All right. If you guys want a little bit deeper dive video on the Fibonacci's and you know, a couple different ways to use them besides this. This is the most common, and this is generally, in a sense, what the Fibonacci retracements are made for to do. But you know, I do sometimes use it in a couple other ways for some other strategies, for some more you know, day trade or swing trade strategies. Okay, so with that being said, thank you guys for watching this video, and if it helps you guys out, smash the like button, and don't forget to comment and subscribe as well.